the week ahead. It's a very interesting time. As a short-term trader, you want to be very careful about making a judgment, is the trend up or down? Granted, it's important, but so much short-term trading has to do with what's going on today and reacting to the current news. Now, to put in perspective, on Friday, we had a promotional webinar for the upcoming intensive that we're going to hold. We started the webinar by asking how many participants were bearish and how many were bullish. While there were some of both, there was a predominance on the bearish side. The current market on Thursday, the market made a new all-time high. As it made a new all-time high, the tempo was very slow. So what did that tell me? That told me that higher prices, instead of bringing in more activity, were cutting off activity. Once I see that, then there's a pretty good chance that the market will at least test to the downside. Remember, the market functions as a continuous two-way auction process. So on Friday, the market did test to the downside. Look down below the prior, all-time or the new all-time high. But as the market was trading lower, tempo also slowed. So what did that tell us? It told us that lower prices were cutting off activity, not bringing in more activity. When you put Thursday and Friday together, what you have is a two-day balance. And it's a true two-day balance because we had slow tempo both on the upside and the downside. So as we get ready for the new week, the long-term trend remains up and in a short-term two-day balance. Now, before we go back to balance, let's talk about, what's happening next week. On Mondays, following quadruple witching, I am very cautious on the market because so many times there's orders related to the inventory adjustment of some of the market makers, and it may not be indicative of what's really going on in the market. Next, we have the potential of a government shutdown. And then on Friday, we have PCE. Now, PCE isn't likely to be as important as it has been when inflation was running substantially hotter. However, you can't ignore it because if for some chance there was, an unexpected move in the PCE, that could roil the market very quickly. When I look and start this week, let's talk about the two-day balance. Respect that the trend is up, then review the balance trading guidelines. The balance trading guidelines are as follows. Go with the breakout from balance. So if the breakout's to the upside, go with it. If it's to the downside, go with it. If the market remains within the balance, all that is doing is further tightening the balance or further refining the balance. Fade or go against any breakout that fails. So if the market attempts to break out to the upside and fails, then go ahead as a short-term trader, fade it. If the market breaks out to the downside and fails, then fade it and go long with the objective of going to the opposite extreme of the balance. But for right now, as we go into next week, it's very uncertain. I think carrying a bearish bias is a dangerous position as a short-term trader. Okay, good luck. Have a great trading week.